So a few weeks ago, I did some research on what is called the dividend capture strategy. With this strategy, you buy a stock just before the ex-dividend date, secure the dividend, then sell the stock and repeat the cycle. If you're not familiar with this strategy, I would highly suggest you start with my previous video before watching this one. But after doing the research, I really wanted to try this strategy out for myself. So starting November 1st, I deposited $100 into my Robinhood account with the goal of securing a dividend on every single trading day that month. I was a little hesitant when I started, so as you can imagine, I was pretty surprised when I got to the end of the month to find out I made 15% returns in that 4-week period. That's right, with $100 and the simple dividend capture strategy, I earned 15% returns in 1 month. I concluded my experiment with a portfolio value of $100.73 and cash dividends that totaled $14.25. But there were a lot of variables here, and I want to break them all down for you in case you're considering this strategy. So in this video, I'm going to show you exactly how I executed this strategy and what components contributed the most to my profits. If you've been thinking about trying the dividend capture strategy for yourself, stay tuned and I'll share everything I learned. I'll also give you the day-by-day recap of every single trade to show you the exact moments and stocks that contributed to my success. So be sure to stick around for that too. After doing my research on the dividend capture strategy, I knew I needed to go into this with some sort of game plan to be successful. I knew if I simply targeted the highest yielding stocks on a given day, I was likely to pick some pretty volatile candidates and would probably end up selling at a loss on most days. Plus, as I mentioned in my last video, I couldn't do this inside my Roth IRA account because M1 Finance does not have the features and flexibility I would need for this strategy. And since I did this inside my taxable account on Robinhood, I needed to be even more strategic in order to earn enough money to compensate for what I was going to pay in taxes. If I were doing this casually, I would be more comfortable with holding stocks for a few days or even weeks until I could comfortably sell them without losing money. But since my goal was to aggressively secure dividends every single day, I didn't have time to wait around for price movements. And all of this meant I needed to put in a little extra work up front in order to maximize my returns. So right before the start of the month, I pulled up the entire list of stocks that were going ex-dividend in the month of November. I used the same guidelines for selecting my dividend capture candidates that I outlined in my previous video, which I'll briefly summarize again here. First, I limited my options to the 3 stocks with the highest market cap on each day. I assumed this would mean less volatility on the ex-dividend date and therefore better returns. After narrowing them down this way, I took a look at the stock's price history on previous ex-dividend dates. Then I committed to the stock that dropped the least on past ex-dividend dates in relation to its dividend payouts. My goal here was to minimize any losses that I would be accumulating as I sold to move into my next position. As tempting as it was to aim for those high dividend payouts, I figured it was safest to stick with the investments that would lose me the least money from day to day. So after a few hours of research, I had my game plan for the month. With 19 trading days in November, since I cut this experiment off before the 30th, I had selected 19 stocks that I felt were safe choices for the dividend capture strategy. All that was left to do was to execute the trades. I'll be honest, the first week or two of doing dividend capture, I didn't think it was going to work. I traded at a loss several times, but I really wanted to stick it out and get all the numbers, and I'm glad I did. Unfortunately, I don't think my profits were due to my particular strategy. So let me tell you where I think I went wrong. First, I want to point out that my idea to select high market cap stocks didn't really work. Some of my biggest losses were from stocks like Starbucks and Clorox, 2 large cap stocks that I thought would be safer because they've been thriving during the pandemic. However, on the occasion where I did pick up a low market cap stock, being Rush Enterprises, I got burned really bad. Since it had terribly low trading volume, trying to time the price movement on the ex-dividend date was impossible and left me forced to sell at a significant loss. So while there might be something to sticking with large cap stocks, it definitely wasn't foolproof. Similarly, I think focusing on these large cap stocks was bad because I often targeted smaller dividends as a result. When I'm only making a 0.5% yield on a dividend capture, the odds of the stock moving more than that within a day are pretty high. So I think targeting higher yield stocks would have given me more wiggle room for staying within some profitable margins. Similarly, dividend capturing stocks with monthly dividends is probably not the way to go. I picked a few monthly dividend stocks because they had high annual payouts, but when split up into 12 monthly distributions, the yields were hardly worth it. So if I were to do this again, I'd seek out those quarterly dividend payers and make sure they had an above average yield. And lastly, my strategy of checking stocks that didn't drop on previous ex-dividend dates didn't work. I think there are just so many variables going on in the markets that it's very, very difficult to predict exactly how much a stock will drop after going ex-dividend. So overall, my strategy was far from perfect, but it's pretty reassuring that even with these missteps, I was able to still earn a decent return for the month. Like I said though, I spent several hours researching the stocks for my dividend capture, and I had to actively trade every day. So let's take a look at whether the profits I earned were significant enough to justify the time I spent on this strategy. Overall, I want to determine whether this was the most beneficial investment strategy for this given period of time, and if this strategy could be repeated with similar results. So first, I'd like to compare my returns with the returns of the overall stock market. I realize there will probably always be a better stock that I could have chosen, but I really just want to take a look at indexes, specifically the S&P 500, to determine if my returns are more a result of positive market sentiment or if I actually picked the right stocks for the strategy. So over the same time frame, when I earned nearly 15% returns, the S&P 500 gained 10%. So I did actually outperform the market quite significantly during this time frame. To try and draw further conclusions, I charted out the growth of my portfolio, which includes both the value of the stocks I was holding and my cumulative dividend distributions, compared to the price growth of the S&P 500. The green line is the value of my portfolio throughout the month, which again included my current stock value and the expected dividend earnings. The blue line is the growth of a $100 investment in the S&P 500 via Vanguard's VOO ETF, made on November 2nd, the same day I started my experiment. You can see the S&P had a few strong days at the beginning of the month, during which time I was mostly in the red with my dividend capture strategy. But I think my hunch was correct because you can see that these strategies were generally either both positive or both negative each day. This leads me to believe that my dividend capture results were less about luck and strategy and more about investing during a bullish month. That said, I did make up some significant ground during the middle of the month when the S&P 500 was more or less stagnant, specifically on the dividend capture of Phillips 66, ticker PSX, which I sold for a pretty sizable profit on the following trading day. After that point, you can see that I continued to slowly separate myself from the performance of the S&P 500 through the end of the month. But when it comes down to it, the bulk of my returns came from just a few lucky trading days. To me, it looks like dividend capture was a losing strategy during the periods where the S&P 500 had positive growth. However, when the S&P was not moving very much, I was able to capture returns in an otherwise uneventful market. So maybe there's an argument to using this strategy during certain phases in the market. Of course, it just takes one dividend capture pick to dramatically change your results, and it's going to be hard to determine if those changes will be for better or for worse. So, was the dividend capture an effective strategy? Yes. Was it the most effective investing strategy? Probably not. I did outperform the S&P by 50% with its 10% return compared to my 15% return. But when you subtract the taxes on these dividends, things get a little closer. Paying my 22% income tax on my $14.35 of dividends, as well as my 75 cents of net capital gains on trading stocks each day, leaves me with $11.20 and about 57 cents of profits respectively. So because of the cost of taxes, my returns actually get brought down from 15% to about 12%, which is much closer to the performance of the S&P 500. And when you consider that this strategy also required much more time and effort than a standard buy and hold approach, this might be too small a margin to justify the dividend capture strategy. Of course, like I touched on in my previous video, if you perform this strategy in a tax-advantaged retirement account, you'll be able to earn much better returns with dividend capture. Overall, based on these numbers and results, I do think that my earnings can be successfully repeated. I just don't think you'll be able to control the results as much as you would like. A lot of the stock trades I made came down to picking stocks based on very loose and, as you saw, pretty inaccurate criteria. So while I could theoretically do this again, I don't feel very confident in my process. Now maybe if you have some extra knowledge or strategy that I don't know about, you could do this more consistently. But I think I would prefer to dollar cost average into quality stocks and funds that I feel good about holding for the long term. Plus, the dividend capture was a lot of trading activity for me. I'm personally a buy and hold investor, so opening Robinhood every day and executing trades is not really my style. I often felt like I was forced into watching the charts and trying to time my trade to get as much out of my dividend capture as possible. So if you enjoy spending that time and making frequent trades, then maybe the dividend capture strategy is a better fit for you than it was for me. But if you want a little more insight, I'm going to show you a recap of every single trade I made throughout November so you can see how it went from beginning to end. Stick around if you want to see that, but if not, I appreciate you watching this far, and I hope to see you back here in a future video. If you enjoyed this breakdown of my dividend capture results, be sure to subscribe to the channel and leave me a comment if there's something you'd like me to cover next. Until then, we'll head back to day one of my dividend capture.
All right, guys, today is day one for the dividend capture strategy. It is November 2nd. Today we are buying Clorox, which goes ex-dividend tomorrow on November 3rd. All right off the bat, I'm a little nervous about this one because Clorox had a big 4 or 5% jump the other day. So now we're already looking at the stock at a higher entry point. So hopefully this will last until tomorrow when I sell it and get onto the next stock. But I guess for now we'll just have to lock it in and see what happens. So here we go, buying $100 worth of Clorox. All right, I'm going to take note of these numbers so we can crunch the numbers towards the end of the month and figure out how all these trades balanced out. So the price I locked it in at, I got 0.46 shares of Clorox, which will lock me in about a 50-cent dividend from this purchase. So that's about a 0.5% yield from this first day. So we'll see how this pans out tomorrow. All right, guys, it's November 3rd. It is election day. Lots of tension today, and my dividend capture strategy yesterday is not panning out so well so far because Clorox is down a couple percent today, quite a bit more than the dividend amount. So obviously the research I did to see what happened at the previous dividend did not pay off. I think there were times if I timed everything correctly between yesterday and today where I could have purchased and sold Clorox at a profit, but that did not happen for me. And as you can see, Clorox has been dropping all day today. So at this point, I was going to try and wait and find a spot to minimize my losses. But I think since the markets are about to close, I just got to sell and get out of this so I can move on and secure my next dividend for the day. All right, guys, I actually messed up when I started this and I transferred my first $100 into Robinhood. I accidentally used the wrong bank account, so the transfer got flipped and I had to correct that situation yesterday. So after I sold Clorox, I was not able to actually buy another stock until I made another transfer. So that made me miss out on yesterday's dividend stock. So today, hopefully we're back on track. I've got my $97 and 1 penny back in my account ready to spend. So we're gonna buy the next dividend stock for the day, which is Intel. It's about 10 a.m., so I just snagged this for $45.84 a share, and that got me about 2.12 shares of Intel. Okay, and with a 33-cent per share dividend from Intel, that's going to earn me about a 70-cent dividend from this roughly 2.12 shares of Intel, and that's going to bring my cumulative dividend total up to $1.21 so far. So we'll hold on for the day and see what happens tomorrow. All right, guys, it is November 5th and the markets just opened for the day. And Intel, which I bought yesterday, actually opened higher than it did yesterday. So I'm going to get out of this position as fast as I can to make sure I lock in this profit as well as the dividend from yesterday, and maybe make up some of the losses I got from the first day with Clorox. So we're going to go ahead and sell the shares I've got right now. Right, so after my purchase price of $45.84 per share yesterday, today I sold them for 46 7 cents a share. So that makes my resulting earnings from this $97.50. So made up a little bit of those losses, like I said, from the first day. But now I'm just going to roll this on into the next dividend stock. All right, so the next stock I'm going to be buying is Rush Enterprises, and I'm not exactly sure how I ended up finding this one. I think I had to search pretty deep for it. And I'm a little nervous because it's got really low trade volume. So hopefully that doesn't come back to bite me tomorrow. But the prices look all right, so I'm just going to go ahead and lock it in for the day and see how it goes. All right, so with my $97.50, I bought 2.85 shares of Rush B. Average price per share is $34.16, and that's going to get me a 14-cent dividend on each of those shares. So that'll be roughly a 40-cent dividend yield for today's dividend capture. And adding that to my previous total, and now I'm up to $1.61 in cumulative dividends. So we'll check in again tomorrow. All right, guys, today's November 6th. It is going to be the end of my first full week of dividend capturing. But today I got burned again because yesterday I bought Rush Enterprises, and today I saw the market price was up a little bit, so I got really excited. I was ready to jump into a sale. And then I noticed that the volume today was really, really low. So I knew that there was not going to be a whole lot of options for me to sell at a good price. So I tried to do a limit sell so I could lock in a sell price that was breaking even with my purchase price yesterday. But the problem with Robinhood is you cannot do limit sells for fractional shares. You have to do full shares. So I was not able to lock in the limit sell order for my shares, and I ended up just having to go with a market sell order. So I did that, and even though it says the market price is $34.18 for the day, since the volume was so low when I did that market sell, it actually sold for $33.09. So that sucks. That's a pretty big drop from what I paid for it. And now I have $94.44 to reinvest into the next stock. So a little lesson here early on, I guess, is avoid these really low volume stocks because you have no control over, or I shouldn't say no control. You have very little control over what price you can actually sell them for if you need to move out of them in a day like I did. So. But we're moving on. So today we're doing American Electric Power, ticker AEP, and I'm just going to go ahead and lock in a market buy with my $94.44. All right, so I just locked in my purchase of American Electric Power at $91.53, and that got me about 1.03 shares. And I'm excited about this one. They have a little bit of a higher yield than some of the other stocks we've looked at so far. So I'm actually getting a 74-cent dividend per share yield off of this dividend capture, and that's going to come out to about 76 cents from today's dividend capture. So that's going to bring my cumulative dividends up to $2.47. So that sounds pretty good for now. Let's hope we don't have another loss tomorrow, but I guess we'll find out then. All right, guys, after a crazy election week, it looks like we got another green day in the market. So the American Electric Power that I bought on Friday is up about 0.5%. currently at the time of recording this. So I'm just gonna go ahead and sell it. Anything above a 0% gain, I'm totally happy with. So I'm gonna offload this real quick and then jump into the next stock, which today is Starbucks. And so I bought the AEP shares at 91.53, and today I sold them at 91.95. So I did make a little bit of profit there. And now I have $94.87 to roll into Starbucks. I am a little nervous because Starbucks had a big jump the other day. Actually, it looks like almost like 6-7%. So this might be kind of repeating the same thing as we did with Clorox at the beginning of the month, just jumping in at the worst possible entry point. But Starbucks is a pretty high volume stock, so hopefully it'll hold this price long enough just for me to get in and out. So I'm gonna go ahead and do a market order of Starbucks with my $94.87. All right, so I just picked up Starbucks at $96.79, so I was just shy of that one full share. I actually got 0.98 shares. And this time around, Starbucks' dividend is going to be 45 cents per share. So I'm gonna get just about 44 cents from this dividend capture today. And that's gonna bring my cumulative total up to $2.91. Just as I feared, the market is up today, but Starbucks is not. So I'm gonna lose a little bit here, but I'm gonna go ahead and offload Starbucks so we can move on to the next stock because we just gotta keep it going. All right, so I was able to sell my Starbucks shares at $93.78 per share, getting me $91.92 to roll into the next stock. All right, so our stock for today is Eagle Point Credit Company Inc., ticker ECC. And looking at the stock, it had a pretty nasty drop the other day, so hopefully I'm actually getting in on this one at a fair price. Okay, so I was able to lock in my purchase of ECC at $8.47 per share, getting me about 10.85 shares. And with an announced dividend of 8 cents per share, that's going to give me about 87 cents on this dividend capture, which is going to bring my cumulative dividend total up to $3.78. So we'll check it tomorrow. All right, guys, today's November 11th, and luckily Eagle Point Credit that I bought yesterday did open higher today than I bought it for yesterday. So I'm going to go ahead and unload this and move on to our next dividend stock. All right, so with Eagle Point Credit, I was actually able to make up some of the losses I took from Starbucks the day before, so I'm right back at about $94.90. Today I'm buying JM Smucker, ticker SJM. I'm actually passing up on some stocks like Honeywell and Schwab. I think maybe a little bit of because they had lower dividend distributions, as well as some unreliable price action on previous dividend ex-dividend dates. So today we're buying JM Smucker, and luckily it looks like it opened at a lower price today. It's down for the day. Can't draw too many other conclusions beyond that, so I'm just going to go ahead and lock in an order. So I locked my purchase of SJM at $116.70, and that got me 0.813 shares. And with a 90-cent dividend distribution per share, I locked in about a 73-cent dividend for this dividend capture. So that's going to bring my dividend total up to $4.51 so far. And as always, we'll check back tomorrow. All right, guys, so yesterday's dividend capture, I think, was a really good example of what people typically expect to happen during with the dividend capture strategy in regards to the ex-dividend date. So as you can see, the JM Smucker stock was kind of building up over the last 2 days as the ex-dividend date approached. And then immediately on that ex-dividend date, the stock price dropped, and actually quite a bit more than the 90-cent dividend. It actually dropped about $2. So this is exactly what people are using to argue against dividend capture. And obviously, if I bought right before the close of the market, before the ex-dividend date, I would have lost that amount. But luckily, I purchased the stock early enough in the day that that drop hadn't happened yet, and the stock price was still building up. So maybe there's some strategy to that. Maybe buying earlier in the day is better. But I just thought this was kind of an interesting price movement for this particular stock. But that said, I still happen to be up after this price drop, so I'm going to go ahead and sell this stock for a very small profit and then move on to today's dividend capture. So I sold my shares of SJM at $117.43, getting me $95.49 to roll to the next stock. And today's stock is going to be International Paper, ticker IP. So we're just going to go ahead and lock in this market buy. All right, so I just purchased about 2 shares of IP at $47.42 per share, and they are paying a 51-cent dividend per share. So that's going to give me about a $1.03 dividend for this dividend capture, bringing up my cumulative dividends to $5.54. So we're almost at the break-even point with my my price losses and my dividend gains. So we'll see how this plays out tomorrow through the rest of the month. Alright guys, today is November 13th and it's another green day in the market, so I'm going to go ahead and sell my international paper shares from yesterday for a small profit and move on to today's dividend capture. So that trade got me $95.60, which I'm going to roll over in today's stock, which is Phillips 66, ticker PSX. And today's an interesting day with the dividend capture strategy because this is a stock I know absolutely nothing about, and I just think that's another fascinating component of the whole dividend capture strategy is that you really don't need to be looking into the stocks too much. So that's just my thoughts for the day, but we're going to go ahead and lock in a market buy of the stock. All right, with a purchase price of $57.34 a share on this stock, I got about 1 2/3 shares, and they're paying out a 90-cent dividend per share. So that's going to get me a total of about $1.50 in dividends, bringing up my total dividends to date to $7.04. So I'm feeling pretty good right now. I'm above that $100 mark that I started with. So hopefully this trend continues for the rest of the month. All right, guys, today's November 16th. It's another green day in the market, and I am up quite a bit on the stock I bought on Friday, Phillips 66. I'm actually up about 7%. So I'm going to go ahead and unload the share today and then move on to today's dividend capture. So from the profit I took on PSX, I now have $102.47 to roll into today's stock, which is going to be Consolidated Edison, ticker ED. So I'm just going to go ahead and lock in that buy real quick. All right, with an average purchase price of $80.21, I have approximately 1.247 shares of ED. So they are paying out a 76.5-cent dividend per share. So I'm going to get approximately 95 cents from this dividend capture, and that's going to bring up my cumulative dividend total to $7.99. So I'm at a good bit of profit right now. So let's see if this holds true for the rest of the month. All right, right on schedule, ED is starting to drop today because it is the ex-dividend date, but it hasn't fallen too much yet, so I'm going to sell this real quick and get on to our next stock. So I managed to sell with just a small loss of about 50 cents. So the dividend I got for the dividend capture yesterday should have made up for that. But now we're going to move on to today's dividend capture, which is Discover Financial Services, ticker DFS. And I'm seeing a little bit of a build up here over the week as the dividend X date approaches. So hopefully this goes well, but we're going to go ahead and lock this in. With a purchase price of $76.86, I got about 1 1/3 share, and they're paying out 44-cent dividend per share. So that's going to get me about a 58-cent dividend, which is going to bring up my cumulative dividend total to $8.57. Guys, we got lucky with another generally green day in the market, so I'm going to go ahead and sell my Discover Financial Services shares and move on to the next stock. All right, today's stock is American Software, ticker AMSWA. It's a pretty low volume stock, so I'm a little nervous we're going to have another repeat of what we got a few weeks ago with a huge drop on the ex-dividend date, but let me go ahead and lock it in. I have $103.86 for my sale of Discover Financial Services, so we're just going to roll that right into this. With a purchase price of $16.85, I picked up a little over 6 shares of American Software, and they're paying out an 11-cent dividend per share. So that's going to give me about 68 cents from this dividend capture, bringing my total up to $9.25. So right now we're a little bit over 10% returns for the month so far, which is really exciting. So hopefully that continues, and we'll see how it goes tomorrow. All right, guys, so American Software did drop a good little bit today. Not too bad, though, so I'm going to go ahead and sell this and try to get out of it. But volume is very low, so I'm a little nervous. I'm going to get burned here, but we'll just lock it in real quick and see. All right, so I did end up losing just a little bit more than I earned from the dividend, so yesterday was kind of a wash, but today we're going to lock into Ryder, just ticker symbol R. So it's looking like it's having a red day, so I'm going to jump right into this. All right, so locking in my purchase at about $57.35 a share. I got about 1.8 shares of Ryder, and they are paying a 56-cent dividend per share. So that's going to give me about a $1 dividend on this capture, bringing my total up to $10.25 so far. All right, guys, pretty red day in the market today. I lost about 2% on Ryder stock so far from yesterday. I'm just going to go ahead and dump it. It's still dropping, so I'm just going to have to cut my losses here and move on to today's stock. So I have a little over $100 to roll into today's stock, which is going to be Johnson & Johnson. I'm excited to jump into this one because this is one of those big, well-known dividend payers, so hopefully this will be a pretty stable option. Plus, the price has been dropping for the past week or so, so maybe it'll give me some good buffer going into this, but I'm just going to lock it in and show you guys the numbers. All right, so buying Johnson & Johnson at about $146, a little under $147, I secured about 2/3 of a share, about 0.69 shares of Johnson & Johnson. They're paying a $1.01 dividend per share, so that's going to give me about 69 cents on this dividend capture, bringing my total up to $10.94 so far. Alright guys, today is an exciting day because last Friday I got paid my first dividend after starting this dividend capture. So I actually got my Clorox dividend after market close on Friday. So that was a really nice reward for getting started, and it was cool to see the dividends finally start coming into my account. So that was really exciting. But in other news today, Johnson & Johnson did not hold up well on the ex-dividend day. As you can see, it dropped immediately when the markets opened today. So I'm down about 1% on this, but I'm just going to move on. So today we're going to be buying Main Street Capital, ticker MAIN, which is actually a BDC or a business development company. And I've covered these on my channel before, and these are unique because, like REITs, they have to pay out at least 90% of their earnings to shareholders in the form of dividends. So these are going to be higher yielding stocks than traditional stocks. The downside of that is that you always have to pay income tax on their distributions. But since we're doing the dividend capture anyway, and we're already going to be paying that income tax, there's really no downside to targeting these for dividend capture because the taxes are going to be the same no matter how long you hold these things. So that's kind of cool. Maine is a monthly dividend payer, and you can see today their price has already jumped because of the ex-dividend date tomorrow, I assume. So we're getting in a little higher entry point, but got to do what you got to do. So I'm going to lock this in and give you guys those numbers. All right, with a purchase price of about $31.51 per share, I got a little over 3 shares of Main Street Capital, and they're paying out a 20.5-cent dividend per share. So I'm going to get about 65 cents from this dividend capture, and that's going to bring up my cumulative dividend total to $11.59 so far. All right, markets are green again today, and surprisingly, Main Street Capital has actually continued to climb since it opened today on its ex-dividend date. So I'm going to unload it for a profit and move on to the next stock. And today we're going to buy NextEra Energy, ticker NEE. So I'm going to go ahead and lock it in and show you guys the numbers. All right, something I did not anticipate here is that NextEra Energy actually just cut its dividend quite dramatically by 75%. Your dividend used to be $1.40 a share, but today it's only 35 cents per share. So instead of that bigger dividend, I'm only going to get about 48 cents on this dividend capture with my hardly over 1 share. So that's kind of a letdown, but maybe we'll make up for it tomorrow. Okay, today's November 25th. NextEra Energy is up a little bit today, so I'm going to go ahead and sell this real quick and move on to our next stock. After taking a small profit, we're going to move over to Dow Inc., ticker DOW. It's had a bit of a run up in the past couple of days, but we're just going to go ahead and lock it in. They've got a pretty good yield, so hopefully this works out for us. Okay, with a purchase price of about $56.53, I got a little under 2 shares of Dow, and they're paying a 70-cent dividend per share. So that's going to net me about a $1.27 dividend capture on this thing. That's going to bring up my total to $13.34 so far. All right, guys, we are wrapping up the dividend capture experiment today. My Dow shares have been dropping today, so I'm going to go ahead and get these out of my portfolio and move on to today's stock. So I did end up losing a little bit more money on trading at a loss than I did from capturing the dividends. So yesterday's didn't really work out for us, but I think it's interesting because now that we're at the last day, we're almost back at $100 even. We have $100.73 for this last dividend capture. So moving on, our very last stock for the dividend capture is going to be Kellogg, and they've dropped a little bit this morning. So hopefully we're getting a pretty fair price here. But I'm going to lock it in and show you guys the numbers for my final dividend capture. All right, with a purchase price of $63.33, I got a little over 1.5 shares of Kellogg, and they're paying a 57-cent dividend per share, so that's going to get me about 91 cents for my dividend capture, bringing up my total to $14.25 for the month. So after 4 weeks of trading, I've captured almost $15 of dividends, but my portfolio has not grown at all. On the bright side, it hasn't decreased at all, so I've at least been able to maintain near that $100 value, but I just think that's kind of interesting after all of these different trades and both good and bad days. So that's pretty good. That's almost 15% purely from dividend capture for the month. Obviously, there were some moments where I earned quite a bit more from capital gains through selling throughout the days. But after all this, I am surprised that it actually worked. I did actually make a profit on this strategy, even though it did take some time and effort to be researching and active in the markets every day. But the fact that it worked, I think, shows a lot in favor of the dividend capture strategy. There's probably more strategies out there than I use to make this strategy successful. So I think this definitely deserves more looking into if this is a strategy you're interested in. I think there are ways to make it work for you. But I really appreciate you guys checking out this video, and if you enjoyed it, please subscribe to the channel for more investing videos like this. And before you go, leave me a comment and let me know how you feel about the dividend capture strategy after seeing this video. I'm interested whether or not you're going to dig into it further. Maybe you can give it a try. Whatever strategy you choose to use, happy investing, and I'll see you in the next video.